Trader, I got your request yesterday. Say I should cover supply and demand, how I come up with my supply and demand levels. And at the end of this video, I'll be saying something very important. But let's get into it, how I come up with my demand stroke supply levels. First of all, my trade on US30, because I covered that few videos back, I think. Yeah, one of them has been closed in 1-to-1 risk to reward, which is here. It brings me back from the loss of last week, which is good. So now back in profit of 600 and something, not bad. Then the second instant funding account, I think is the same case here. Profit has been secured, and I'm glad now. Small. Rome wasn't built in a day, neither was Gwagwalada. So now let's get into the video. Supply and demand levels, right? That was the question. That was the question. And I want to start by saying that supply, let's start with demand, because demand means you want to, if you are looking for a demand level, it means you want to buy something, because demand means the price of that good will likely go up. Supply means the price of that good will go down. And I want to now say that there are two types of formation for supply, two types of formation for demand. The first formation for demand is usually a rally base rally. That is a continuation move. Then the second type is usually a drop, a base, and then rally. Remember, rally means price going up. Rally, price is going up. So that is the formation for demand levels: rally base rally and then drop base rally, and I'll be showing you guys example of what those are. Then in terms of supply levels are usually made up of rally, or let's just be the same way, drop, base, drop. That is what makes up supply level 1. Or you find rally, base, then a drop. I hope so far it might seem self-explanatory, because it actually is. The terms, like, they explain themselves already. And let's now give example of both. Now for a rally based rally, it's usually made up of market rallied, then had a period where it paused, then it continued its rally. That's why it's usually a continuation type of entry. So a rally based rally usually looks like this, something like this: a rally, then a period of rest, which is what makes up the base. And the base is usually made up of indecisive candle, which we'll cover in practical session. So rally base rally. Then a drop base rally usually is something like this: market dropped, then there was base, then market rallied, and this zone where the base was is eventually our point of interest, and that is for drop base rally. So we'll do example of both when we cover it. So that's for demand. Then in terms of supply levels, it's usually something like this. For the drop base drop, you see the market drop, just how we had in the rally base rally. Market drop, there was a base and eventually continued in the drop, and that place where the base is our point of interest. Same thing with the rally base rally, where that base happened is usually our point of interest. But when we talk about rally based drop, which is the second formation type, it's usually price push up rally, then there's a base, then there's a significant drop that you can pay attention to. So you see, it's like just the opposite of what demand is usually what supply is. So I hope that is just the basics. And one thing you should know is that if you want to get more information about how I get my trade ideas, you would know that I basically just copied the exact thing that Brent Skupinski has for free on YouTube, supply and demand series. I might be linking that in the description, so that you can go through it by yourself. But then I'm just giving my own explanation from my own terms, but it's the exact same thing that Brent Skupinski does, basically no difference. So now, how did I now come up with this my trade on US30? You might be wondering, because this level here, okay, I want you to take a guess. What will you classify this particular level now? Because okay, let me give you hint. Is a supply level, and we just talked about two types of supply level. So what type of supply level is this one? I'll give you a minute to come up with your answer. 3, 2, 1. If you said a rally base drop, then you're very wrong. But if you said drop base rally, you might be up to something. Why? Because you can see there was a drop, then there was a slowdown, which is this cluster, this base, and then a continued drop. And that's how I took this particular trade idea. Now for another pair, US 500, what would you call this? I'll still call this a drop base drop level, because there was a drop, then there was a cluster, and then there was a continued drop, and this for US 500, which is the S&P 500. Now let's look for another example. So because so far we've been observing supply levels. Now what will you see here? You can see that there are two actual formation of supply levels. One here, which is this level here, and the next one here. So two levels of supply. This is a drop base drop. This particular one I just deleted, the drop base drop, but this one above is a clear example of rally base drop. You get, so this is the first example you are getting of rally base drop. Why? Because just like I said when I was giving the first description, market rallied, then there was a base here, indecisive candles before this significant drop in price. This is a rally base drop formation, but here what we had here, this next zone was a drop, this is a base, and then this is a continued drop. So this type of formations that we just talked about, stay one place now. So you see drop base drop level, and then I showed you example of rally base drop, which is this formation here. Same thing you have above here, which is still a level of interest for me in case the market comes back there and fundamentals look good, because I didn't want to take this trade off this wider version, but if I had, it would have been a lot better for me. But then this level here, I wouldn't necessarily call it a rally based drop, even though it's looking like it, because then this is a drop based drop level. And why is it a drop based drop level? Because this particular candle, and this is what we'll get into now, this particular candle is actually a decisive candle. You can see the body and the wick. The wick is not up to 50% of this entire body. Which candle am I talking about? This particular one here. So the wick here, which is below, is not 50% of the entire range that this body covered. So this is a drop base drop level for me. So we would find a better looking rally base drop level, and I think we have found one, because look at this beauty here. You see a rally, a base of indecisive candles, and then you see eventual dropping in the market. So that is a rally base drop level for supply. So I hope this is making sense so far for you, and we've so far covered supply levels. Now let's switch it up and talk about demand levels, because like I said, we had two formation of demand level. We have a rally base rally, and we have a drop base rally. And right now, as you are, I want you to look at this screen and tell me if you can identify the levels, because there are two levels. I want you to define both levels for me from the explanation you've gotten so far. This level here and this level here, what will you classify both of them? Level 1 is what, and level 2 is what? I'll give you a few seconds. 3, 2, 1. What do you call this? So now let me give you the answers to this. This level here, which I just deleted, is a rally. As you can see, it's a rally, a base, a rally. Makes sense? That is formation number 1. Formation number 2 below is a drop in price, a period of basing out, then a continued rally. So those are the 2 formations we just talked about. That is basically all that makes up, that is all you need to know about supply and demand. Rally based rally, drop based rally. Now let me now give you hint that might be helpful to you. One thing you should understand, that what makes up our base is indecisive candles. And let me zoom into indecisive candles so that you would see any candle like that you see, just like this 3 here, this particular 3 candles here or 4 candles here, any form, let me just delete it again. So now anything that looks indecisive, because you cannot compare this particular candle here, you can't compare it to what this one here, you can't compare it to what you're seeing here in terms of strength, in terms of volume. If this is not your first time trading, you know what volume is in candles and you know what strength is. So this is a decisive drop, this is a indecisive period in the market, and what followed it up, you see decisive move to the upside. So that's what makes up our base here. And you might say, okay, this is also a rally base, rally level here, because this is a decisive candle before indecisive candle, because this right here is an indecisive candle. This particular candle here is an indecisive candle, and this is a decisive candle. So as you go on with your trading, where you need to pay attention to is indecisive points in the market, because even with the example I gave you yesterday with the Hong Kong index, you would still know that with the Hong Kong index trade I took earlier in January, which I can still highlight, what type of level formation is this? I want you to take a guess. This particular formation here that made me take this trade, what would you call this particular formation? Take your time. I'm giving you 5 seconds this time around. 5, 4, 3, 2, 1. If you said this is a rally based rally, then you are very wrong. This is a drop based rally. Why? We saw this red candle drop, we saw base, which is indecisive, and then we saw a rally. I don't know if that makes sense to you, but in this particular point here, you have a decisive candle following indecisive candles here, which I want to show you. You have a decisive candle before indecisive candles, so you can call this a rally based rally level compared to what we had here, which is a drop based rally. And this was the trade I took earlier in January. So that's how it is. Now I hope this presentation was helpful to you, because I'm now getting to the part of the video where I just give you something that would help you as a trader and help you not deal with a lot of things in the market. And what I'm talking about is the fact that nothing is promised. Regardless of whatever strategy you found in the market, regardless of whatever is working out for you, just remember and know that nothing is promised in this market. Back to what I was saying, I said nothing is actually promised in the market, because you can have all these strategies on lock and then inflict yourself with the expectation that since I have this, all trades should be going well, all trades should be hitting TP, all trades should be breaking even. That's not true, because even after having all these concepts, having these rule sets, and knowing, okay, this is how I want to approach the market is a female dog, the B word, you know what I mean? So you cannot have certainty in this market, and it's contrary to what you might believe, that okay, if I find the perfect strategy, I would be safe from market noise. That is a lie. That is exactly when you face the market noise itself, because that's when the market will test you. So all that to say, conservativeness is the name of the game, not over risking, because this level looks so textbook and all fundamentals align. I would put risk behind it. It usually doesn't favor a lot of people. So that's basically all for this series. If you still have questions, ask. If this was helpful to you, That's really nice. But always remember, what makes up our base is indecisive candle. And in a place where you have cluster of indecisive, decisive, and indecisive, but you can cover the entire zones, go for it. Cover the entire zone to save yourself from being stopped out, because it's always harder to be stopped out from a trade and then try entering that same trade. It's always harder, because you being stopped out, there's a hint of fear that comes into you, and you become fearful and you second guess whether you take that trade or not, and usually those are the ones that work out. So to save yourself from that, if you see a cluster of levels on top of level, cover everything together and take the trade, just like the example that I gave on gold few videos back. That was when I was talking about seasonality. Yeah, check the seasonality video that I posted. You see how I was able to map out my zone on gold and cover for level on top of level. And if I didn't do that, I would have been stopped out. I hope this video has been helpful to you. I hope the whole playlist has been helpful to you before now. And if it has been, I have one request. Drop your comment. Just drop your comment saying this has been helpful to you. Just drop it so that other people coming to the video would see that this video is producing or is providing educational help to people, it's providing gems to people, because these are things that I paid to learn, and it wasn't little funds. So I'm cutting cost for a lot of people for free. So don't forget to subscribe, don't forget to like, and I'll be seeing you on the next video. Take care. This is All Stars Align Trading, and this is Grizzly. Peace.